Professor, I think we got your audio back.
Okay,
can you
thank
maybe
you.
start your answer again?
Yeah, right. Well, let's talk about, I mean, you listed some very good reasons why yields have risen. If it's stronger growth, what would you rather be in, stocks or bonds? I mean, clearly, stocks are the place to be in if we get stronger growth. And I don't mean just for last quarter. I think the promise of AI is real. This year, our growth is being driven by productivity. We actually have payrolls that are only half as big increase as we had last year, and we had less than 1% GDP growth. And this year, we're going to have well over 2% GDP growth. So productivity-driven growth, I mean, first of all, it brings inflation down. It's good for earnings, but it does drive yields up. Higher real growth, more borrowing, more capital investment. I want to be in stocks and not bonds. Let's talk about the deficit. Suppose the higher yields are driven by the deficit, and that may mean higher inflation, in the future with big deficits. Where would you want to be? Stocks or bonds? You would want to be in stocks. Now, Sarah mentioned Japan. I'm not as convinced. Japan 30 years ago, when its stock market peaked off, was as big as the United States. Now it's a tiny fraction. Its economy and an aging population is declining. Yes, it holds a lot of treasuries, but I don't think Japan is the force that it once was. So I'm not as concerned about Japan as being a source of the reason. But when I take a look at these higher yields, especially driven by productivity, growth, and even if you worry about deficits, listen, I'd rather be in stocks.
Isn't the geopolitical picture, though, now, Professor, more short-term, right, more acute, more apt to give investors caution?
Right, it does, and these geopolitical problems are usually opportunities to buy if we look back at history. Now, clearly things could get worse in the Middle East before they get better. You are invited to try to time that in the market. Not many people can. What is the most famous saying in stocks? That stocks climb the wall of worry. And when then there's no clouds in the sky, you're buying too high. I really think geopolitical risk is in the long run an opportunity to buy stocks, not to sell stocks.
I think the point that I was trying to make, Professor, on Japan is that not necessarily that it's, an economic headwind. However, it is a trigger for higher rates in the U.S. because we do see that. When there's talk of their yield curve control adjustment, then our Treasury yields rise, which is all an economic headwind. So I get that you like stocks better than bonds, and we've had pleasantly surprising growth, but now we're facing the fastest tightening cycle that we've seen, this big backup in yields and what that does for financial conditions and for consumer spending and quantitative easing at the same time. That's the test for growth and for earnings ultimately, isn't it?
And you meant, I guess, quantitative tightening at the same time.
Yeah.
Yeah, right, at the same time. Right. Certainly, I think these higher yields have been the source of this, 5-6% drop that we've seen in the S&P. But then when I think about, well, is that because of stronger growth? Then that means next quarter, that means next year, earnings are going to be better than they would be otherwise. Don't forget, we talk about stronger real yields, and certainly they have gone up. The 10-year TIPS is 2.5. We have to remember when TIPS came out in 1997, they were 3.5, and within 3 years they were 4.5. So in the long picture, these real yields, although certainly higher than they've been in the last 10, 12 years, are not high in terms of history. And if we have real growth that's the source of these higher yields, I don't think that's a negative for stocks.